So what exactly is Solana? Solana is a decentralized crypto computing platform that seeks to rapid transaction speeds. Solana is a web-scale blockchain that provides speedy, secure, and scalable decentralized applications and markets. Solana's system can currently handle 50,000 TPS transactions per second and 400 millisecond block durations. One of the goals of Solana software is to demonstrate that there are a number of software algorithms that use the above combination to create a blockchain, allowing transaction throughput to scale in proportion to network bandwidth while meeting all of the blockchain's characteristics such as scalability, security, and decentralization. SOL, Solana's native coin, is used to pay transaction fees and staking. It permits holders to vote on future updates. Solana is a cryptocurrency as well as a versatile platform for operating crypto applications. Its key novelty is speed, which is achieved via a collection of innovative technologies, including a consensus process known as proof of history. We provide software development, recruitment, and consulting services in the fields of fintech, cryptocurrencies, and blockchain worldwide. If you're looking for a job as a developer, email your resume to jobs@qqNade.com. That's jobs@qqNade.com. Contact us for a free consultation through our website at qqNade.com. If you'd like more details, check out the description below this video. What makes Solana different? Bitcoin's arrival occurred at an opportune moment, and it aided in the resolution of an issue that people all over the globe had been grappling with. With the development of virtual currencies, strangers from all over the globe were able to make financial transactions through the internet without the need of established procedures. Bitcoin pioneered decentralized transactions, giving birth to what is now known as a blockchain. However, blockchain has yet to tackle one of its biggest issues, which is the length of time it takes to complete each transaction. Without a question, blockchain was inherently sluggish. As a result of Solana's inclusion into the mix, cryptocurrencies have a bright future since it was able to ensure speed. Solana, in essence, made crypto networks quicker and more scalable. History of Solana. Anatoly Yakovenko, a former Qualcomm engineer, released the Solana white paper in 2017 with colleagues Greg Fitzgerald and Eric Williams. Yakovenko's innovative technology resulted in a distributed system with a novel algorithm. The method improved on the widely used proof-of-stake and proof-of-work blockchains. Yakovenko, the creator of Solana, began his enterprise with a proprietary codebase written in the C programming language. Following his collaboration with his old Qualcomm colleagues, Yakovenko shifted to the Rust programming language. Fitzgerald prototyped Yakovenko's concept in 2018, after which he released the first edition. We provide software development, recruitment, and consulting services in the fields of fintech, cryptocurrencies, and blockchain worldwide. If you're looking for a job as a developer, email your resume to jobs@qqNade.com. That's jobs@qqNade.com. Contact us for a free consultation through our website at qqNade.com. If you'd like more details, check out the description below this video. According to the journal, 10,000 signed transactions can be reviewed and executed in little over half a second. Yakovenko also hired Stephen Ackridge to work with his business when Ackridge demonstrated that the system could be enhanced even further by delegating signature verification to graphics processors. Yakovenko was able to attract former Qualcomm colleagues and other developers, and they founded Solana. The project was first titled Loom, but because of similarities with an Ethereum project, the creators were obliged to rebrand it, giving rise to the name Solana. In this example, Solana was a little coastal town outside San Diego where the co-founders stayed while working at Qualcomm. Yakovenko and his co-founders advanced their technology by expanding it to cloud-based networks. Following that, the firm launched a 50-node authorized public test network. This network's capabilities enabled it to sustain bursts of 250,000 TPS. The developers were able to utilize Solana to complete over 40 billion transactions at an average cost of 0.00025 per transaction using their approach. To appropriately support the project, the developers created Solana Labs by launching a prototype of a test network. Following its initial coin offering, ICO, the project was able to raise over $25 million in March 2020. Solana Labs collected more than $314 million in investment through June 2021. The funds raised via investor contributions were utilized to expand the network. Solana has been able to expand its personnel throughout the years, and as the firm grew, it hired a large number of web developers and managerial personnel. Solana also founded the Solana Foundation, a non-profit organization dedicated to advocating for worldwide support for Solana. The Solana Foundation is headquartered in Switzerland. Solana Labs is essentially in charge of designing the company's protocol. Serum, Tether, CMCC, Multicoin Capital, Oracle, Chainlink, Gravity, Switchboard, BAM Protocol, Nozomi, and other well-known blockchain and DeFi firms are among Solana's top investors. Various digital currencies and platforms utilize different ways for verifying transactions. Solana's historical proof. Every blockchain network has a method for validating the millions of transactions that occur every day. This strategy varies greatly from platform to platform. For example, Bitcoin, the world's most popular digital currency, employs the proof of work mechanism to validate transactions on its network. The approach is used to process transactions and guarantee that the blockchain network is free of fraudulent transactions. To validate each transaction, the proof of work algorithm makes use of the processing capacity of system nodes. It is seen as the product of complicated mathematical problems solved by miners, who gain a reward in the form of Bitcoin as a consequence. To authenticate transactions on the Solana blockchain, the network employs the proof of history approach. To do this, users produce historical records that demonstrate that an event happened at a certain time and place. When a transaction or event is analyzed, it is assigned a unique hash and count that can be publicly and efficiently confirmed. Counting, which functions similarly to cryptographic timestamp, informs users when each transaction or event happened. Each node also contains a cryptographic clock that monitors the network's time and the sequence of events, allowing for higher throughput and efficiency in the Solana network. Where can I get Solana? Solana has developed to become one of the largest blockchain platforms where crypto users may get whatever crypto assets they choose, including non-fungible tokens. The platform's market has grown as a result of continuing interest from purchasers all across the globe. Investors interested in purchasing Solana's token may do so on Binance, Bitfinex, FTX, Coinbase, and other cryptocurrency exchanges. Is it possible to issue other crypto on Solana? Solana allows for the creation of several tokens. Developers may design fungible and non-fungible tokens on the platform using Solana's program library. A token is a physical item that symbolizes a digital object on blockchain. For example, if a physical item, such as a diamond, is transformed to be represented in digital format, the digital format of the thing is represented by tokens. A token may also represent reality, emotion, quality, usefulness, and other things. Solana's observation. Solana has been chastised for a number of reasons, including the platform's failure to depict the decentralized structure of the crypto realm and its lack of transparency. 1. The centralization of Solana. Solana has been chastised since several basic aspects of the platform are nearly identical to those of a centralized system. According to detractors, venture capital companies and others hold around a half of the token issues. According to detractors, having this sort of investor participate in supporting a crypto system undermines crypto's neutrality stance. They also fear that having this sort of investment might have a detrimental influence on crypto's long-standing philosophy of decentralization in the long term. 2. Solana's stakeholder system. Solana's staking mechanism has also drawn criticism, the most serious of which being the claim that Solana's staking method is comparable to that of a centralized system. The quantity of tokens invested determines the size of the SOL reward. This implies that if a node divided its stake between two validators in order to get 2 votes, each would receive the equal rewards. They would also have to pay double the voting cost. As a consequence, validators are attempting to hoard tokens among fewer validators, instead of issuing tokens and spreading them over the network. They do this in order to get additional blocks. Because tiny validators earn little incentives equivalent to server fees and voting expenses, hoarding tokens poses a significant barrier to accessing a Solana node. Although this is true, it is common for tiny blockchain platforms to be governed in almost centralized manner in their early stages. Solana is similarly in its early phases, and it will evolve into a more decentralized platform over time. 3. The prerequisites for Solana's nodes and validator. Solana has been chastised for being too optimistic about money and income. The ease with which anybody may become a validator exemplifies this, except for the fact that operating a validator costs money. There are no stringent minimum criteria for SOL. Validators must provide SOL to validate votes, and an election day costs 1.1 SOL or $133 a day at current pricing. Every year, this is projected to cost roughly $48,000. Another example of how pricey Solana is may be seen in its hardware requirements. Starting a node might cost up to $6,000 or more. Solana's latest news. OpenSea, the largest non-fungible token platform, has announced intentions to launch Solana-based NFTs on the platform. While Solana has grown to become one of the largest networks in the crypto industry, the platform and its native currency have been subjected to continuous volatility and other disasters, causing its value to plummet by more than 40%. Solana claims itself on being quicker than Ethereum, but the currency has continued to stutter and fall down after hitting an all-time high in November with other cryptocurrencies like Bitcoin and Ethereum. The move by OpenSea to offer Solana-based NFTs on its platform is unquestionably good news for Solana, and a strategy to assist it regain value and be better prepared for competition. Ethereum, one of Solana's main competitors, has its NFTs on Solana. This provides Ethereum with an edge over Solana. However, with the new expansion, Solana will be able to attract clients and improve its worth by using its inexpensive prices and lightning-fast connections. Solana's price dropped many times in 2021 as its network went down due to excessive demand on the blockchain. Solana now has direct access to the largest and busiest NFT marketplace as a result of this transaction. With over 1 million wallets and about 5 billion in transactions on its platform, OpenSea will assist Solana in gaining access to millions of digital assets, investors, and NFT collectors. If everything goes as planned, Solana will be a major benefactor of this fantastic opportunity. Solana has risen to become the third-ranked blockchain in terms of non-fungible token sales since its NFTs were listed on OpenSea. It broke the previous record of 1.5 billion in NFT sales volume. Solana's success ranks it third in terms of NFT sales volume, after only Ronin and Ethereum. Fractal is a Solana partner on their NFT project. Fractal is a marketplace for Solana gaming non-transactional tokens. Solana's NFTs will be accessible on the marketplace, and they will mostly consist of in-game goods like avatars, weapons, and land plots. While it intends to expand to other blockchain networks in the future, Fractal will only operate with Solana for the time being. Fractal has also been able to collect $35 million in finance to help bring its ambitions to fruition. There are several compelling reasons for professionals to consider investing in Solana. This includes Solana's ability to retain a favorable image when the rest of the crypto industry is in turmoil. Furthermore, Solana's existence on NFT is a clear sign that it is one of the few rising cryptos that is heading in the correct route. Solana still has a long way to go, but definitely the crypto is moving in the right direction. We provide software development, recruitment, and consulting services in the fields of fintech, cryptocurrencies, and blockchain worldwide. If you're looking for a job as a developer, email your resume to jobs@qqNade.com. That's jobs@qqNade.com. Contact us for a free consultation through our website at qqNade.com. If you'd like more details, check out the description below this video.